Let's get a bit adventurous. First off, read this disclaimer carefully, and do your good deed of today by liking and subscribing. One of the ETFs that is, especially intriguing, that is the Frontier Markets ETF. So 52% from the 52-week low, 2% from the highs. So the things that you have developed markets, and then you have emerging markets, and then you have what we call frontier markets. So if you look at the holdings for this ETF, you see that you have countries that you rarely see on other ETFs. Let's actually go to ETF.com. So ETF database, they have this terrible system when it comes to figuring out the names. How many people can guess what that is? Okay, maybe Nigeria. But okay, let's go here to ETF.com, and then you can see the countries. You have Kuwait, Morocco, Romania, Kenya, Bahrain. So these are stock markets that it's difficult to get exposure to. Hence, the FM ETF could be a very interesting way to diversify your overall portfolio. So first, let's look at the seasonality. This is all the months we have. And the current period is actually kind of constructive. March, April, May, these are, historically speaking, over, quite a few years, they are strong. June and August are the worst months, but this is a bullish period. So that is interesting. So here is all the history we have for this ETF. Okay, something that is very clear is that this one moves in huge cycles. You can see this very clear cyclicality, these very big waves. But what is a bit different is that you see that if we were to draw these time cycles, it doesn't really work. You can see that even though it does move clearly in cycles, in this instance, you see that this pattern, the cycles shifted. So you could argue that instead of having one huge cycle, maybe you have two smaller cycles, but the cycle was also broken due to the lockdown. But anyway, it moves in these waves. What I find especially interesting now is that we have this red 200-week moving average. If we zoom in, clearly it is, surgically in some instances, a level we test. Like here, multiple times in a row, we surgically test it. So obviously, the 200-week moving average, it is a big deal. And now we are, again, testing it a bit vigorously. Potentially, this could become a support level. That would be very good for the bulls. Which something that is helping the case here is this black line. That's the price line. You can see that you do have these places of horizontal support, like here. That is even more corroborating the potentiality here for this level actually holding. Even if we go back here and here, you see that this is a level that matters. RSI, it is a bit on the lofty end. We have seen that we don't need to go that much higher until there is a risk of a pullback, but there still is, it's not like a super dangerous territory. The accumulation distribution is actually rather constructive, even though price is significantly lower here than it was here or here. You see here that there is this influx of buyers. That is constructive. Correlation here with the S&P 500 is very interesting. We have basically no correlation whatsoever. That's very interesting indeed, as far as building a more market neutral portfolio. After the COVID plunge, okay, now we can't get the correlation. Okay, here we get the statistical correlation up here. Okay, you can see that in the most recent time frame, there is a strong positive correlation, 93%, which is rather strong. But if we zoom further back, you can see here that the correlation has been much lower in the past. Hence, And we did see, on the weekly data points that it basically there's no correlation looking long term. Because it can go from a high here of approaching perfect correlation to this extreme low here as an example of being minus 78% negative, which is almost the S&P and the frontier markets moving opposite each other. Okay. Looking here, you can see that the 50-day moving average in green has basically supported this post-lockdown rally. We are fighting our way back here. The 50-day is obviously important, but I do think that we could make a strong case that the key thing here now is this horizontal level. And also, given that the 200-week moving average has basically become horizontal as well, this is, the key battleground. So what would be ideal here for frontier markets is to basically just shuffle a bit sideways. That's one way to actually cool down, the RSI and other overbought indicators, and then build a base. And that would be, but that would make this very, very interesting from a longer term perspective. Looking here at the Finwiz, they draw this trend channel. We did break down below that trend channel. They draw also a double top here, and that it's a bit more to the bearish side. Options are available. It is shortable. If we go here to valuations, so here you can see that there's a 25 PE on the S&P. The PE here, if we go here, you can see that it is 11.77. If we calculate the difference, it means that the PE is minus 53% lower on the frontier markets. So definitively, this is more in the valued category for sure. What is very interesting is actually that the dividend is pretty healthy. It's 2.8%, 1.5% dividend here for the S&P. Hence, even though these are stocks from frontier markets, they do pay a dividend, which is pretty healthy sign. Looking at the sector breakdown, you do have a bunch of financials, then telecom, consumer non-cyclicals, basic materials. Yeah, I mean, you could make the case here that in at least some of these sectors are more sectors with more stability, and another, basically, these kinds of companies, they have a lot of moat. Okay, so to sum up my take here on this ETF, looking long term, I would categorize myself as, looking years into the future, I would be speculatively bullish. I think that the valuation is interesting. Looking at, the more macro picture, there is a lot of developments happening in these countries. Though it is important to be aware that there is definitively a political risk. There's some of these countries are located in some pretty volatile regions, but that is most likely to a meaningful extent also reflected in the current price. Looking at the more shorter time frame, months and weeks, I think the key thing is this level we are at now. Now there's a very key critical horizontal support levels. Though what I find personally most interesting here is the statistical correlation we saw long term. There was basically no correlation whatsoever with the S&P 500, almost at zero. That is very, very intriguing. And another thing is that I think that buying shares, financially supporting these companies, these economies, is a way more far-sighted and constructive way to help out frontier markets. So it sort of is a bit of a charity thing as well.